Welcome to the India Fintech Diaries, the only podcast focused exclusively on the Indian fintech market. I'm Elroy.
And I'm Hemant. In each episode, we dive into the latest trends, ideas, innovations, business models, and personalities that are shaping India's fintech landscape.
We also invite amazing guests who are innovators and industry players that are driving the change that is helping make financial services more modern, innovative, and inclusive in India. Come join us as we explore the changing landscape of fintech in India. Welcome back to the India Fintech Diaries, your go-to show for all things Indian fintech. I'm Elroy, your host, and in today's episode, we continue our journey into the world of invoice discounting. Joining us to discuss more is Deepak V. Naragund, co-founder and CFO of UpCap.
Hey Elroy, hi. Good morning to all your listeners. Really excited to be part of this podcast talking to you. I've been following India Fintech Diaries for a while and you guys are doing some amazing stuff. So thank you for having me on the call.
Great to have you on board, Deepak. Deepak, to start off with, it will be great if you could give us a quick introduction of yourself, your background, and how you ended up co-founding UpCap.
Sure, Elroy. Thanks. I'll do that. So before I get started on my background and our journey, I'll take you back 3 years. This was March 2020. There are a lot of families planning for some major events in April. It
Right.
could be medical. It could be medical stuff. It could be college admission, school admission, what you have. And then the pandemic stuck, and the stock market sort of responded negatively, and a lot of the things that people had saved up for effectively vanished because the monies were all out in the market, overexposed to stock markets, and it resulted in people having to replan a lot of stuff. So us co-founders of UpCap, we are four co-founders, three chartered accountants and one tech person. So we were faced with a similar situation, and our thought was, if we as executives in corporate jobs were so exposed to the stock market vagaries, same would possibly be case with majority of the Indians. And hence we started our quest to look for alternate investment products which would offer us fixed income returns over a period over 10 years, different 10 years. And that research led us to finding UpCap. So my name is Deepak Naragund, chartered accountant, 20 years of corporate experience across various multinational corporations in various functions across business, finance, controllership, as a CFO, as a regional CFO. So, and all of us come with similar experience. So the four of us put together come with more than 125 years of corporate experience, and we believe that that experience would stand us good stead as we go about solving India's fixed income problem and help people avoid, to some extent, the vagaries of the stock market.
Deepak, while that's a very interesting introduction to how you're helping people solve the vagaries of the stock market, I believe there's also a very important second factor to what you're doing, right? ClearTax recently undertook a survey of SMEs in India to understand their cash flow problems. And the survey estimated that SMEs and MSMEs typically require about 15 lakh crores in invoice funding annually, and very little of it actually gets funded. So also help us understand a little about how invoice discounting actually helps unlock cash flow for these SMEs. And on the other side, it also helps investors get diversified sources for investing.
Sure, Elroy. That's a great point, and that's essentially the second half of our platform. What we offer. So you're right. India has a huge MSME financing problem. The gap is roughly about 315 billion amongst existing MSMEs. There are 10,000 companies getting incorporated every year. That's about 1.2 lakhs every month. So that's about 1.2 lakhs a year. With this, the funding gap is only going to increase. Of the 315 billion, roughly about 100 billion is invoice discounting. And MSMEs are either not able to get to getting their invoices discounted, or they are not aware of this as a possible solution. And hence, UpCap also works with MSMEs in specific sectors to help them access working capital, growth capital, expansion capital, and those requirements are curated into products for our investors to participate in. Now, maybe what I can do is I can take a step back and explain what invoice discounting is, because not everybody may be aware.
Sure.
Invoice discounting has existed for ages. It's been the forte of banks and financial institutions that have undertaken this. What happens is an MSME sells to a larger corporate. The corporate accepts the product, but is going to pay after a certain credit period, which can range anywhere from 30 to 120 days. Now, the MSME requires capital, because without having that working capital, without cash infusion into his business, he would be unable to service more clients, and that sort of restricts his expansion. So then that's where invoice discounting steps in. Essentially, he can pledge his invoice to a bank or to a platform like ours, where he gets money upfront at a discounted rate. That discount is essentially the return to the institution who is financing the MSME, and hence it's pretty safe instrument from a financier angle, because the corporate is well rated. They are going to pay on the due
Right.
date, right? So if you see, there are three parties who are benefiting. The MSME, he gets cash flow. The
Yeah.
investor, he gets to make a return on his investment because he had a surplus cash flow that he could partake for a shorter tenure of time. And from the corporate angle, nothing changes. The corporate had to pay a
Right.
certain value after 120 days, and they're going to do that. So nothing really changes for them, but everybody benefits in the process. So that's invoice discounting. So we work with MSMEs. We curate their working capital requirements into products for our investors to participate in.
Deepak, now let's come to UpCap. Talk to us a little bit about the platform. Let's say I was an SME who wanted to get my invoices listed on a platform. What's a typical process I would follow?
So, as we started thinking about the entire platform piece, one of the pieces that we were very clear was that every solution that we brought to the table would have to be a digital one, because that's where scale comes in. Manual processes would just not work. And in India, scale is everything, right? So,
Right.
an MSME looking to participate on the platform, what they do is we ask them a initial set of documentation, which is evaluated. We ask for the financial statements, and we do a thorough due diligence around that. Then we look at alternate data points like there's GST returns. We look at their bank statement analysis. We look at founder history. We look at the promoter's background. We look at all of those, and then determine whether a particular MSME can qualify to be a borrower on the platform or does it not. Assuming that they do go through the process, then we enter into stringent contracts. So we work with some of India's leading legal firms. So we enter into stringent contracts where each of us is bound to perform our portion of the contract. And with that, the MSME is all set. We draft an SOP, standard operating procedure, for their team members. After that, everything is digital. We set a credit limit for the MSME on the platform. The MSME is authorized representative. He comes onto the platform. He just uploads the invoice digitally and he's done. And then within a period of 24 to 48 hours, the money is in his bank account. So that's as simple as it gets. Yeah.
Very interesting, Deepak. And also, how do you source these SMEs? They're actually incoming leads, or do you also actively go out and solicit interest from them?
Yes, so we are focused on two sets of borrowers, because given the vastness of the India's economy and the nature of businesses that operate in India, a
Right.
spray and pray approach we thought would not work. And there are some sectors which are fairly better addressed than some others. So we look at broadly two sectors. The first is funded startups, and that too particularly in the agri-tech side, because
Right.
agri-tech is more finance hungry than the others because of the perceived risk that exists in the entire sector. So funded startups is one, and that gives us some advantages. One, the funding itself would have ensured that there's a thorough due diligence on the promoter's background and the company operations. Second, once they're funded, it means they've been in operation for a while. There's a product market fit, and hence they are now scaling their business, which is where working capital requirements come up. So that's the first. The second sector that we are targeting is healthcare. Again, hospitals in the range of 50 to 400 beds. These are hospitals that are run, owned, operated, managed by doctors. And hence, there is a lot of requirement for working capital solutions. If you look at insurance, right? Insurance in India
Right.
as a percentage of healthcare spends, it's increasing humongously. Before the pandemic, it used to be about 20% of healthcare spends. In the last 3 years, it's gone up to about 35%, and it's projected to go to about 70%, where the global average is about 85. So, as insurance becomes a bigger percentage of the healthcare spend, it's going to cause working capital pressures, because there are tenures which range from 7 to 45 days in insurance companies making payments to hospitals. And so we think that there is a big play there. So these are the two sectors that we focus on. How do we get to them? One is we go through word of mouth. Doctors refer other doctors, and essentially that becomes a good source of borrowers for us.
Right.
We work with certain incubators, and those become good sources of borrowers for us. From an investor angle, because we work with family offices, their clients have businesses which require working capital. So that's the other piece that helps us source borrowers. So we do have a few mechanisms. Now, over a period of time, Elroy, what we're planning to do is
Yeah.
we're also going to have an outbound sales team which is going to actively look at talking to hospitals, talking to these funded companies, and bring them on board for an evaluation. So that's how we source our borrowers. Essentially, the quality of borrower is super critical because we need to ensure our investors' money is secure.
Deepak, now that's very interesting that you bring up investors. I think it's time to actually focus a lot more on the investing side of things.
Sure.
One thing I found very interesting about UpCap is from an investor's perspective, I don't need to really invest in the entire invoice. I can take a fraction of it, right? So talk to us a little bit about the investor side of the platform and what that looks like.
Absolutely. So, investors are why UpCap exists because, like I told you, the genesis was our quest for finding suitable
Right.
alternate investment products for them to participate in, which would beat inflation, right? If you look at a FD, I get a 5 to 6% return, and that is while my money is theoretically growing, I'm actually eroding wealth when the inflation is about 7%. So,
Right.
investors are why we exist. Essentially, there are a few things that we do for investors. One, we understand that this is not a product that a lot of people would be aware of. And hence, we've kept the entry ticket size at 25,000 for invoice discounting for the investors. Now, this is essentially a ticket size that we thought investors would not mind trying something new out because they get returns in the range of 11.5 to 14% over a 30 to 120 days. So our belief is most people for the first time would come in because the returns look attractive. Once they see that there's actually money coming and the returns are what they're promised to be, then they're going to spend more time understanding the product, and then their entire life cycle on the platform is going to increase. The value they bring to the platform is going to increase. So that's how investors operate. So you're right; they don't need to subscribe to the entire value. They start with 25,000. They do have the option to subscribe to the full value of the invoice if they are more discerning investors and would like to try their hand at it. But we do encourage them to start with 25,000, understand the product, experience the returns, and then make this a certain percentage of their portfolio.
Deepak, as an investor, I guess the other question I have is from a legal and compliance standpoint, right? How
Yeah.
does this entire fractional investing work? What's the framework you guys operate under?
Yes, that's a very, very important question. And this is the question that frequently comes up when we talk to investors, and particularly the family office side of the investor community. So we are
Right.
a platform. We sort of bring the investor, who is the supplier of funds, and the borrower, which where the demand of funds exists. We bring them together on the platform. So there are a few things that we do to secure investor returns. One, no money comes into the account, into the company account. All transactions are through escrow accounts, which are managed by SEBI registered trustee. So that is one. Second, there is stringent due diligence on the borrower side. I think we end up rejecting more borrowers than accepting because they do not qualify in our scheme of things from a regulatory angle. So we end up rejecting that. So the quality of borrowers is the second piece that ensures that investors' money is secured. Third, at most of the times we do look at seeking certain collaterals from the borrowers, which ensures that in the event that there is a delay, then we have the option to secure our investors' returns. The most important piece, Elroy, is
Yeah.
there's already a transaction that has occurred, right? There is a company that exists that it has sold to a larger company. The larger company is going to pay on a due date. So there is an underlying transaction that has already occurred. So there is no doubt as to the existence of the underlying piece. The only piece that the investors are doing when they step in are to finance the credit period that exists between the buyer and the seller. Now, with that, there could be delays, and there are provisions that we use to cover for delays. But defaults are going to be far and few in between, and we do have mechanisms to cover for those as well. So, if you're an investor, then I think you do not have to worry. We are strong co-founders. We work with some of the best legal firms in India. We work with some of the best tech service providers in terms of escrow services and all of it. So the money is pretty secure. Yeah.
So that's one aspect of it, Deepak, which is more from the borrower side. Again, as an investor, right? If I'm investing in a fractional kind of investment,
Right.
how does that work? Is it that I'm being part of an SPV and the SPV then invests in the invoice?
Okay.
Or is there some other mechanism that you're using here?
Okay, so what we have tried to do, Elroy, is keep the entire process very simple because an SPV again sort of creates a little bit of complexities. So an investor journey on UpCap is fairly easy, right? The investor comes onto the platform, he registers, which is a 3 to 5 minute process. He signs up an onboarding agreement. Then there is a wallet that is created for the investor on the platform.
Okay.
And this is essentially an underlying escrow account that helps him conduct all his transactions. So the investor transfers funds to his wallet. When he sees an opportunity on the platform, he wants to invest in that. And so when the investor looks at it, he gets all the details in respect to the borrower. So he gets to know who the money is going to, what business they are in, how long they have been in business, what is the profitability, what is the founder background, what is the funding status, growth plan. So they get to know all of this. And so it's a conscious decision that an investor makes. So he then decides that, okay, this sort of instrument makes sense to me. He says, fund this invoice, and the money is essentially moved from his escrow account into the borrower's escrow account on the platform. Assume it's a 5 lakhs invoice. An investor can decide to put anywhere between 25,000 to 5 lakhs, right? He can choose whatever is his investable surplus. He can choose to participate in that. So the money gets into the borrower's escrow. Once the 5 lakh threshold is hit, the platform triggers fund transfer for the trustee to approve it, from where the money moves from the borrower's escrow to the borrower's current account. And hence, the flow of funds is secured. On the return side, on the due date, assume it's a 30-day invoice. So on the 30th day, the enterprise pays into the escrow account. The platform again calculates the returns for each of the investors. So it's a 5 lakhs invoice. There are 10 investors who put in, say, 50,000 each. So the platform calculates their returns, and then there's a fund transfer that happens from the borrower's escrow account into the wallet of the investors. So the fund transfer process is very secure. The flexibility exists with the investor in terms of how much amount they would like to invest on the platform. And all we are doing is ensuring that we bring good quality borrowers. We have a strong digitized environment where they operate, and we've tied up with some of the trusted sources to ensure that fund transfers occur securely. So that's how we bring them together, and that's how the investor journey is secure.
Deepak, I think the other $1 million question that would be on everyone's mind is how is UpCap making money in all of this? Can you give us some insights into the business model as well?
Absolutely. So essentially what we do is we do not charge anything to the investor. Our belief is investors are trusting UpCap's process with their hard-earned money as investment, and so there can't be a charge to that, and hence the borrower ends up paying the fees. So we essentially charge the borrower a certain piece of onboarding fees, which is annual recurring fees. This essentially helps us cover our costs on credit due diligence and all the other processes we need to ensure that the borrower is up and running on the platform. And then there's a transaction fees that the borrower pays, which is essentially a spread that UpCap makes. And that's the source of revenue for us. Over a period of time, given that, again, these are things that we planned for the future. But if you look at portfolio advisory, right, it's typically available to people who have huge amount of money and who are, when you have that much amount of money, then you are probably well informed in terms of the opportunities available. Is your portfolio diversified enough to weather the vagaries of market ups and downs and all of it? But that is not available to retail investors, people who have who can invest up to 20 lakhs or 15 lakhs or even 10 lakhs for that matter. So we do intend to start evaluating those over a period of time. It comes under SEBI, so we'll probably have to work with SEBI and get registered there. But that's something that is also going to be a service that we will offer, which is going to be a value-added service for the investors. So currently, our model is onboarding fees from the borrower and the transaction fees from the borrower.
Deepak, also, while you have launched fairly recently as far as market operations are concerned, right? What's the traction you've been seeing so far on the platform?
Yeah, we've had great traction. In fact, yesterday we celebrated our first half closure because the team has had a fantastic Jan to June. We launched on 1st of Feb. So we've been around for about 5 months from a commercial go live angle. We've onboarded 500 plus investors, and then we've onboarded about 5 borrowers. We have discounted invoices worth 5.5 crores on the platform. We've repaid investors to the tune of over 2.5 crores because the cycles have completed. We've had about more than 60% instances where the monies have been paid on time, and 40% where it's been paid ahead of time. So there have been no delays, absolutely no defaults, and investors have had a great journey. And the second half looks even more promising because we've got a great set of borrowers whom we are talking to. We're talking to some family officers to bring them on board. So it's very exciting, the second half, the way it's panned out now. Yeah.
That's great news, Deepak. Deepak, in case any of our listeners wanted to learn more about the platform, what's the best way that they can do that?
So my advice is come onto the platform, take a look at upcap.co.in. We've got videos, we've got blogs which explain to you what the product is. The video itself is a great 1.5 minute kind of explainer which talks about what the product is, explains how it's secure, how it helps you diversify your portfolio, get you to earn returns which are more than what the FD and other equivalent short tenure products can earn you, and how you can commence your journey on the platform. So I would encourage them to look up upcap.co.in, and they can learn more about us and begin their portfolio diversification journey, Elroy.
Thanks, Deepak, for that information. I'll definitely include those details in our show notes so people have that as a ready reference per se, right?
Absolutely.
Deepak, it was great speaking with you today. Thanks a ton for joining us, and hope that UpCap has an extremely successful year ahead.
Thank you so much, Elroy. Thank you so much for having me. It was a pleasure talking to you. And I do hope this sort of helps investors understand that there are options available in the market for them to evaluate, which will help them diversify their portfolio, get returns which sort of at least beat inflation and give them a decent return on their wealth, and help them also participate in the larger digital picture, that's digital story that's happening in India. So thanks so much for the opportunity, Elroy. I really love talking to you.
Thanks again, Deepak. That concludes another episode of India Fintech Diaries. Remember to visit our website, indiafintechdiaries.com, for more exclusive content. Also, don't forget to subscribe to a Substack newsletter for in-depth fintech analysis. Until next time, stay safe and keep exploring the world of fintech.